Let me walk you through the result of the December 2023 fiscal period and guidance for the following two periods based on the DPU variables. Adjusted EPU, which underlies JPR's distribution, excluding capital gains, hit the bottom in the June 2023 period. Then, it is expected to be incremental over the following three periods, driven by progress in leasing and the acquisition of Nakano Central Park East. In the December 2023 period, adjusted EPU resulted in 7,377 yen, 108 yen increase period on period, and 97 yen greater than guidance. There were several drivers, such as growth in rental income due to progress in leasing, increase in income equivalent to expense for restoration, and improvement in energy cost position. DPU of 7,600 yen has been secured by utilizing internal reserves. As for the June 2024 period, albeit some decrease in income equivalent to expense for restoration, there will be significant contribution from the acquisition of Nakano. As a result, guidance for adjusted EPU is 7,500 yen, 123 yen up, period on period. Guidance for DPU is 7,600 yen, as we will tap internal reserves. Then, for the December 2024 period, free rent expiries and full-term contribution of Nakano are factored in the guidance for adjusted EPU of 7,520 yen, up 20 yen, period on period. DPU guidance is once again 7,600 yen, which matches the floor level. Let's take a look at occupancy situation. Occupancy rate based on concluded contracts improved to 98.4% for the December 2023 period, driven by progress in leasing. Tenant departure scheduled for MS Shibaura building will lower the occupancy to 97.7% in the June 2024 period. However, its impact will be minimal due to some retenanting prospects. I would like to discuss our latest addition of Nakano Central Park East to JPR's asset portfolio. This office building, together with the South Tower, was developed by Tokyo Tatemono. Sourced from their information, JPR is going to acquire shared ownership equivalent of 53% in stake. Nakano train station is in close proximity to this asset. In addition, the building is adjacent to Nakano Shikinomori Park, offering nice leafy atmosphere. As a result, the property is also given positive credit in the viewpoint of office tenants' well-being. On financing front, debt as well as cash will be allocated, given the current condition of the J-REIT market. Let's move on to JPR's external growth strategy. On the back of sponsor support, JPR's AUM has been accelerating in recent years. The gross acquisition has amounted to 113.3 billion yen since 2020. Net incremental asset value after dispositions is 86.3 billion yen. This is a substantial increase compared to historical years. JPR intends to drive external growth continually by leveraging abundant pipeline available. Next topic is on our financial strategy. Total of 18.5 billion yen was financed with 6.7 years of average duration in the December 2023 period. Despite the ongoing unclarity for rate trend, rate hike impact should be limited in the short run, thanks to our consistent endeavors in maturity elongation and diversification. With respect to sustainability initiatives, JPR was upgraded to the highest A rating by the CDP assessment in 2023. Last but not the least, I will comment on JPR's distribution strategy. As discussed, JPR's interim adjusted EPU target of 7,600 yen is now in sight. There is still abundance in our internal reserves to tap in order to sustain the 7,600 yen floor. Our key driver remains external growth with dependable sponsor pipeline. JPR is going to not only pursue the immediate target of 7,600 yen, but also fulfill the medium-term goal of 7,800 yen at the earliest possible time. Thank you for your kind attention and support.